You are listening to ChartingWealth.com for Thursday, the 25th of August, 2016. This is our version 2 today because I got long-winded and went over the 10 minutes, which is all I ask for you to devote every day. So I'm re-recording a shorter version. I apologize. Well, you didn't have to suffer through it. So we're doing it again. Let's jump right into the markets. IYY on the 2-day chart. That is the total market index fund. What do we see going on? A divergence, a crazy one. We had a crossover going down on the 2-day candles back on the 22nd of August. We then had the MACD and the signal line separate even further, but the market actually went up on the 2-day candle, even though today, that is the 24th, was a down day. That's why we have a large wick on top. What do we have going on? Well, when the market moves up, the prices move up, but the indicators move down, that is a divergence, and typically that upward movement does not hold. Those of you who've been paying attention to that, you can see what happened. We have both of our indicators on both of our charts crossing over, going down at the same time. Those of you who've been listening to the broadcast for a while, you've seen this happen before, and every time that you've jumped into that down move or up move, if both of them rotate over going up, it's been a portent of profitability. Does it mean that it's going to absolutely happen this time? No, but it sure has worked for us in the past, and that is why we rely on things that have worked until they don't work anymore. What is going on with this market? I couldn't tell you because it's absolutely bat-you-know-what crazy. It's just bizarre. We look at the S&P 500, the SPY. What's it doing? Well, it's still above the 2-day trend. The weekly trend line. I've actually gone to the trouble to draw you a weekly trend line. Thought that would just be helpful since we can't really draw much of a 2-day trend line since the MACD crossed over going down, but the money action as far as price movement is going up. Really strange. The S&P 500 down over 0.5%, 0.51% for the day, while we have a long wick on top from that up movement on the prior day of the 2-day candle, and also a long wick on the bottom. So again, just completely bizarre. The derivative oscillator is still in the positive, although it's lost a lot of its energy. Very strange with this divergence that we see. Very, very, very strange. Okay, let's look at the 4-hour chart. And this is where you can really see up movement in the morning on the 23rd of August, down movement in the afternoon, then lots of down movement, huge down wick in the afternoon where the market went all the way down to somewhere around 217.30, something like that, closed at 217.85. So again, those of you who jumped in with that rotation over sometime, say, in the morning on the 24th, you're probably feeling pretty good about yourself. The market actually closed below the 2-day trend line. Again, that's not much of a trend line. Pushed through, it didn't close below, but the wick pushed through the weekly trend line. So again, all sorts of bells and whistles going off at this point. Now let's look at the 2-day chart, and we're going to go to the Qs. The Qs was down the most of the 3 indexes, down 0.65%, but that's only about half of how much gold was down, and it gets even weirder. Okay, we have not yet crossed over going down on the 2-day chart for the MACD on the Qs, the NASDAQ 100, the technology stocks, but it's getting close. The MACD itself is now in a down move, getting closer to the red signal line. Derivative oscillators still in the positive. Again, getting closer to the weekly line, which I drew on there for you, the weekly trend line. Now, let's take a glance at the 4-hour chart. Lots of movement up in the morning like we've seen on the other charts, down in the afternoon on the 23rd, down in the morning further, and then lots of down movement in the afternoon on the 24th, pushing through and closing below the 2-day trend line, touching on the wick the weekly trend line at the bottom of the Bollinger Bands. Crazy, crazy, crazy. Okay, well again, don't have a confirmed down move to call yet because we haven't seen a crossover yet on the NASDAQ 100, but who knows, that might be coming soon, slipping sideways for the time being. Now, let's go lastly to gold. Gold was down 1.11% for the day, almost double the biggest index down move. Typically, what happens with gold? It moves in the inverse of whichever direction the markets go. But it didn't over the course of the day on Wednesday. Gold went down twice as much as the markets went down. What do we see going on with gold? Well, it crossed over going down on our 2-day chart back on the 8th, and it is still in a confirmed down move, still below the 2-day trend line, accelerated even further down over the course of the last 2-day candle. Here's where it gets interesting. Let's look at the 4-hour chart. Remember when it crossed over in the afternoon on Friday the 19th? Well, if you jumped in then and you followed our rules for trading, which of course you can learn at our How to Read a Stock Chart video that everyone who subscribes to this podcast at chartingwealth.com gets a link to. If you haven't listened to it yet, spend 15 minutes and do so. What are our rules? Well, when the small chart rotates over after backing up in the same direction as the big chart, it's time to jump in. If you'd have jumped in the afternoon on Friday the 19th, where has it gone from there? Well, the high that day, 128.53, it opened at 128.53. Where did it close? At 126.49. Just a few days later, actually 4 trading days later, it closed down substantially lower. Again, our rule working yet again. I encourage you, please do the practice trades that we talk about. We are not a stock calling service. We don't give you trading advice. We're an education firm. We want you to open up a virtual account at any of the online trading houses for free and practice these trades like we talk about. Now, gold, of course, you would need to be in an inverse gold fund. You don't buy gold when gold's going down. If you've not listened to our training at the website and on YouTube, please listen to our inverse funds, how to make money when markets crash. Gotta do that training. Very, very important. Folks, that's where we are for our run out of time here. Thank you so much for listening. Pay attention to these markets. Practice trading. Cover all of the training that we have at the website, at YouTube, all over. You want to help us out? Please subscribe to the podcast at iTunes. Give us a 5-star rating. Also, subscribe to our YouTube channel. We're getting closer and closer every day to 1,000 subscribers. Once we get that, we can provide you with proprietary broadcasts to those first 1,000 subscribers. We know thousands listen every week, but we need you to be a subscriber, both there and on iTunes. God bless you. Thanks so much. We love to hear from you. Go to chartingwealth.com. Let us hear from you. Let us know what else you need. We will try to help. Take care from chartingwealth.com.